Welcome to Pioneers in Payments, where payments experts share their insights. Now, here's our host, Donna Blum.
Welcome, everyone. Today, I have the pleasure of speaking with Eric Grover from Intrepid Ventures. Welcome, Eric.
Thank you.
I'm so glad that you're here to join us today. Would you mind getting us started by telling us a little bit about your background in the payments industry and the work that you do at Intrepid Ventures?
Sure. So I've spent now more than 40 years in the payments industry. I was with GE Capital's credit card business, what's now Synchrony. I was with Bank of America. I was with Visa International, with Nations Bank's finance company, with Transamerica, on the board of Nordstrom's credit card receivable subsidiary as a non-executive director. For the last 20 years, I've been providing corporate development strategy consulting to players across the payments value chain. So networks, processors, issuers, companies serving the payments value chain, companies investing in the payments value chain. I've been a prolific commentator on the payment system, payment systems worldwide. I've been generally a critic of regulators. I was the first to publicly call for banks to spin off MasterCard and Visa. So that's where I'm coming from.
Okay, great. And Intrepid Ventures is your company, from what I understand?
Intrepid Ventures is me, Inc.
Fantastic. And would you mind sharing, I understand from what we talked about a little earlier that it is a consultancy. So what kinds of services do you provide?
Well, I advise companies that are providing, that are networks, processors, issuers on their strategies, on competitive threats, sometimes on how they might think about entering new markets. I advise a whole range of companies that are investing or serving the payment system on how to think about the value in particular players, how they match up, how the competitive landscape and dynamics work. I advise companies selling into the payments value system or industry, how to think about who they're selling to, what they're selling. In many cases, you have companies that are that have a set of services, but they don't live in the payments industry, and having someone help them navigate that is often very helpful. Some of my most fun engagements have been helping people think about funding challengers, new companies that are coming in with a putatively better mousetrap, and trying to handicap what are the prospects, what are the key success factors, what are the challenges.
Great. Well, I'm so grateful that you're here with us today, and we're hoping to glean some advice from you. Let's start off with a question about what you perceive to be the most notable trend in the payments industry today.
Well, I'm hard pressed to pick, one trend. I mean, there are a range of trends, some of which seem obvious and we don't necessarily think about. So one very screamingly obvious but important trend is that, and we say payments, I think we mean generally electronic payments, and worldwide, electronic payments are growing at a very healthy clip in almost every market on the planet. And that has been the case for decades. It's going to continue to be the case. So really the point is we're in an industry that enjoys very, very healthy growth, and it's going to continue to enjoy very healthy growth for a long time. I think payments friction, or what we think and our expectations around payments friction. So payments friction is declining in most use cases at the point of sale, whether it's online, offline, for P2P payments, for bill payments, for interbank payments. In many cases, the payment part of a process is becoming almost invisible. It's embedded in something else. And consumers' expectation around that are changing, and they're becoming much more demanding. So that's all good. I think form factors are becoming less relevant. So in the quote unquote card industry, and we still talk, many times, certainly in the United States, about a card industry for retail payments, the big networks of Visa, MasterCard, Amex, Discover. The card's a form factor, and the cards are a convenient name to describe these networks and the process. But the card is simply carrying payment credentials, and they could be in a token, they could be sitting in the cloud, they could be in a watch, they could be tied to an alias, a mobile phone number, an email address. But what's important, what's central, is there is a payment network with a set of rules, with a value proposition, maybe with a brand, and consumers, merchants, banks are relying upon that network and making payments. It's what other trends? I think the industry is becoming, for many players, more global. So the opportunity, if we went back 50 years ago, with a couple exceptions, almost all payment networks and processors were national, and some were just regional. In the United States was a patchwork of regional ATM and debit networks. So we've seen consolidation at the national level. While there are only a small handful of genuinely global players, so I would include SWIFT, the close to monopoly interbank cross-border payment messaging system, Visa and MasterCard as genuinely global systems. But below that, there are tier 2 payment systems, both traditional card networks and alternative payment networks like, say, PayPal, Alipay, WeChat Pay, and some processors, principally European and North American, who are in a land rush of sorts, expanding overseas, trying to establish a more multinational footprint, which increases their value proposition. It also exposes them to more higher growth markets. So if you're a US processor or a US network, yes, we're the biggest electronic payments market for the moment. And we're still growing at a pretty healthy clip, but the US is a pretty mature market. And if I want to buoy long-term growth, I'm a reasonably large payment system processor, exposing myself to higher growth, emerging markets, some less competitive markets, I think is an imperative.
So we're trying to give advice to payments professionals and payments organizations about the best path forward. Obviously, there's so much happening in the payments industry today. So we're trying to sort of just boil it down for them and give them an idea of best practices or best, in this case, best opportunities to take advantage of. So what would you say is the biggest opportunity for organizations that process payments today?
Yeah, so I think it depends. So I think from a standpoint of big payment networks, systems, continued international expansion, and then expanding into adjacent opportunity spaces. So, by example, if I'm a big retail payment network, expanding into adjacent P2P payments, perhaps expanding into some B2B payments, where you can leverage your existing assets. I think if I'm a smaller payment system, and we see P2P payment systems trying to go to retail, see that, let's say, Swish in Sweden, as an example, going to retail, Pix in Brazil. So building a base off of P2P engagement. We see that with Square Cash, with Cash App, providing fee-free P2P payments, which actually are costing Square or Block money on every transaction. But now they're bringing it to retail, not only within their Square ecosystem, but now they're going out to the merchant processing ecosystem and going to provide it to merchants more broadly and compete as a retail payment network. So I think that's a fascinating path to growth. I think for traditional processors, payment processors, both on the issuing side and on the merchant side, with some scale, I think international expansion is a must. I think whether they're small or large, I think adding more services, bundling services around that core payments offer is critical. There may be some cases where the business client, the merchant, is only interested in payments, but if the processor can get more hooks in, which is to say provide more value, the relationship becomes stickier. There are more places to attach fees. The revenue stream is less subject to erosion. In fact, might not be subject to erosion at all. So I think those are clearly areas for opportunity. For processors at scale, if they can build platform economics into what they're doing, I think that can be compelling. For the small player, that's not a viable option. But for a large player, doing things where the value of the processing offer increases because the platform is getting bigger and there are more services available on it, is very attractive. I think we're seeing more players trying to compete, provide processing services on both sides of the payment ecosystem, which is to say serving merchants and also serving issuers or cardholders, but generally issuers. And where you can do that, where you can touch the transaction on both sides of the ecosystem, there are very real opportunities to add more value. You have more intelligent, you get more economics because you're touching it on both sides. But more importantly, you see the transactions at the bank, with the consumer and with the merchant, and therefore, have an understanding of what they might want, what they buy, what their taste might be. And so, for example, if I can go to my merchants with a set of offers for specific cardholders that have particular tastes, and generate thereby incremental sales, well, then that merchant is less worried about merchant discount fees and shaving them. They're getting incremental sales, and I can prove it. And on the flip side, the credit card or debit card issuer is getting incremental sales, incremental interchange, incremental receivables, and the consumer presumably is getting some benefit, a discounted, maybe they got a free or 50% off a sushi meal in Manhattan, maybe they got a discount on a bicycle, but they're getting something that's relevant. And we see this. There's a small cap public company called Cardlytics, which does this over the open network, where they go to banks and they say, we go to merchants and say, would you like to get more customers, give us a profile, let's put together some offers, and goes to banks, large issuers, and gets permissioned access to transaction data. And using that determines, what consumers might be receptive, might be interested in a specific offer, makes the offer, consumer likes the offer. They're acting on this because they think they're benefiting. The merchant benefits, the processor, in this case, in the middle, Cardlytics benefits, and the bank benefits. And for processors that have a presence on both sides of the ecosystem, this is always an opportunity. Now, what I'm describing sounds very simple, and it is simple in principle. The execution can be difficult, but I think that's a very promising area, and it's not going away.
That's wonderful. I love it. It's a win-win-win. So
yes,
yeah, it definitely sounds like it is an opportunity that will grow simply because there are so many benefits for everybody involved. Yeah.
Well, and I would add, that sometimes in the industry, you hear people obsessing about transaction cost. And I guess all well and good, ceteris paribus, lower, something cheaper is better. But everything else is rarely equal. And if I can deliver more value to everybody across the value chain, and it costs a bit more, I think that's good. And the system generates, provides more value, and we have a happier merchant, a happier network, a happier processor, a happier bank, and a happier Joe and Sally six-pack, the consumer.
Right. Excellent. Well, those are a couple of the largest opportunities today. What would you say is the greatest challenge for organizations that process payments?
I'll give you two categories of challenge. So one, I think that I can't think of a single sector in payment processing that isn't becoming more competitive. Our industry is very competitive, and if anything, is getting more competitive. So, that's just a hard reality. It's a good thing, but upping one's game, if you're not a little paranoid as a processor, and it's easy. There's inertia in payments, right? So you have a portfolio of clients, and let's say that you're not really paying attention, you're not investing in upping your service, your business doesn't go away immediately. But we're in a world where I think one has to be forward leaning and looking for ways to enhance the value delivered. And so that's real. Second, in very different nature of challenges, if you will, I think in many markets, including the US, regulation, the government is a threat to the industry. And we think about the US, and this is theoretically gone, but we had Eric Holder's Justice Department cooked up something called Operation Choke Point. And Operation Choke Point on its face, sounded like mom got an apple pie. The idea was we're going to deny access to payments and the banking system to bad actors, to criminals. And if criminals don't have access to payments, their ability to engage in their activities will be inhibited. Sounds great. Well, as a practical matter, what the DOJ, FDIC, and OCC did was they pressured, bullied, strong-armed banks and processors not to serve industries that were politically out of favor. And they were very effective at doing that. And industries that were perfectly legal and were politically unsympathetic or even disliked. And large banks, the regulators have enormous discretion, and generally they would categorize this under we think you have reputational risk if you serve the subprime credit industry. We think you have reputational risk if you're serving gun dealers or you're serving cigar shops, as examples, or escort services. You can go through a whole range of different services, and people have different views of which is politically unacceptable. But the point being that it had a chilling effect on the industry. Now, for the big processors, most of these industries are relatively smaller, and certainly wasn't taking the risk of serving them. So what we ended up with was, boutique processors serving them, generally charging richer prices because there was less competition. Jeff Sessions, Attorney General Jeff Sessions, in theory, killed that. But this is an example of politicized regulation. We currently have a CFPB that under Rohit Chopra, that I think it's fair to say is no friend of industry, is looking to take scalps, and so I worry about that. Now, there are jurisdictions abroad where the climate is appreciably worse. I mean, generally speaking, the U.S. payments industry, regulation in the U.S. payments industry has been relatively benign, which I think is a good thing. If I'm a payments player within the European Union, the regulators are much more interventionist. If I'm a payments player in, say, in Russia, the central bank is much more interventionist. So, government broadly as a category is something one has to worry about. And I think it's hard. I don't know what the takeaway would be. As a member of industry, I would simply say or suggest that making a case for more minimalist regulation is in the industry's interest, and it's in consumers and banks and businesses' interest.
Yeah, basically let the market dictate.
Let the market regulate, let the market pick winners and losers. And the market is a ruthless regulator. If businesses aren't providing, if a payment system is not providing services that are satisfying their consumers, the market takes capital and people and away from them,
right,
and quickly reallocates them to businesses that are better serving or ideally delighting, their consumers. And the wonderful thing about market regulation is it's dynamic. We live in a dynamic world, and it responds real time.
Yeah, that's great. I would agree. So moving on, we talked about opportunities and challenges, but if you had to leave our audience with one silver bullet piece of advice,
Yes,
just one,
yeah,
what would that be?
God, that's hard. One piece of advice. This is going to sound trite, but I guess I think focus on my business. Focus on your business. Which obviously means serving consumers, your customers, and focus on the business from take a kind of a bifocal view of the business. So you've got to be serving, ideally delighting your existing portfolio of consumers, but you also have to be thinking about where is my business, where is the market going to be, in 24 months, in 5 months, kind of the Wayne Gretzky comment about, I think about where the hockey puck's going to be. Well, and no one knows, right? None of us have, but we have to be thinking about where is the market going and how are we positioning ourselves? And then, you adapt. It is, so that would be my 2 cents.
I think that's great. Yeah, we talk a lot about resiliency. So, you have to have solutions in place to meet today's needs, but you also have to have solutions in place that are flexible enough and resilient enough that they're going to meet the needs of the future too. So, yeah, very good. Well, before I let you go, Eric, I want to make sure that our audience knows how to learn more about Intrepid Ventures. What information would you share with them?
Well, the easiest thing, please go to my website, www.intrepidventures.net. There's a presentation of my business. There's a collection of many of my articles and presentations, a few talks, my services are, I provide advice to payment systems, U.S. and in the U.S. and abroad, to processors, to people who are thinking about building a payments business, to people that are selling into the industry. I'm somewhat of a network-oriented guy. But please take a look at my website, skim it. There's a lot of material there. And I think it certainly conveys what I do and how I think about the industry.
Well, Eric, you certainly have a wealth of knowledge, experience, and wisdom, and we're just so grateful that you've shared some of that with us today. And I just want to thank you for your time, as well as everybody who joined us today. Have a wonderful day.
Thanks, Donna. I enjoyed it.